afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ed Carson with the breakdown of the action in today's session, Tuesday, July 9th, where the indexes were little changed, but plenty to talk about underneath the surface, Ed.
Yeah, I want to take a look at a few stocks. Embraer, which flashed a buy signal, Diamondback, which is setting up, and then Cava, which is depends on how things go next, what today's action was about.
All right, we will take a look at those three stocks, but first let's analyze the major indexes. The Nasdaq today up a little more than 0.1% by session's close, while the S&P 500 was up a little less than 0.1%. On the downside, the Dow down about 0.1% or so, but closing off lows. And the Russell 2000 small cap index lagging a bit, down 0.4%. So to see the Nasdaq and the S&P 500 up again today, while we're already stretched, it seems like things are looking good. But we are in that situation, Ed, once again, where we could be due for a pullback.
Could be due for a pullback. And actually, because the Nasdaq's gains have been so minimal the last 2 days, technically the Nasdaq is a little less extended from the 50-day line. But still, yeah, it could use a pullback or a pause for a few weeks. It doesn't mean we're going to get it. I mean, we've gone up the last few days. It's been extended for several days and we've kept rising. So it isn't like a panic thing. Yeah, what David Ryan said on IBD Live today, it's look, the Nasdaq looking a little bit stretched, but there's still a lot of stocks you can buy. So it's a little bit, you just something to be careful with if you make new buys, knowing that the Nasdaq stretched, the Russell 2000 is a little weak. There's some underlying weakness. So it's not necessarily an ideal situation, but it's not a bad situation. It's a good situation to still be, at least solidly invested.
Right. And I mean, we're going to be taking a look at three non-tech names for different reasons, of course, and we'll get to all that. Let's take a look at the S&P 500, looking a little less stretched. And something that Justin and I were talking about yesterday is with all of the strength that we've had and with the bullish conditions that we've had, can now these key round numbers become a level of support, Ed?
Yeah, it certainly could be. And you can imagine if it pulled back, that pretty soon the 21-day line would be catching up to that. So that would be another area of support along with 5,500. So yeah, definitely could be. It'd be nice if we could just have this a casual pause and maybe hang around 50 there kind of thing, or 55,500 for a while, and let more things digest and let more bases form. But it's been really strong, and it's nice to see this broad index doing so well.
Yes. Okay. And anything else to note on the indexes before we get to the equal weight ETFs?
Yeah, let's take a look at the equal weights.
Okay, let's do it. So here's RSP, the equal weighted S&P 500 ETF, continuing to hold in this trading range. So what do you make of it, Ed?
Well, it's one thing, as you can see how that RS line is really weak in the last couple of months. I mean, it's been lagging for a while, but really come down. Obviously, we've had NVIDIA and some of the mega caps like Apple and things, and now Tesla's coming on there. So they're all doing great. But equal weight, not so much. Again, on the other hand, though, look, if it would just take one good day and all of a sudden there's a lot of this, there's some sectors, there's a lot of stocks where it's like one good day or maybe two, get above the 50, get above some trend line or short-term highs. And all of a sudden it's like, hey, so it's tricky, because again, it's one of those situations, again, one bad day and it's like we could be hitting 1 month lows on some of these things. So it's definitely at this turning point. We've been at that turning point, it seems like forever. So it doesn't have to turn right away. But it's something to know when to go, like a lot of these things, like the Nasdaq stretch, this is there. It's not all in that, perfect sweet spot that you'd like to see.
Exactly. And at the same time, that doesn't mean that there aren't stocks to buy, that there aren't stocks that are working and reasons to be invested, right? This would just, be that cherry on top, I guess you could say, to check all of those boxes for this bull market, right?
Yeah, and it'd be nice, more breadth, and maybe some of those mega caps pause for a little bit. That'd be the nice mix. We get what we get.
Yeah. Okay. Here's a look at QQEW, more of a tech bent to the equal weighted. This is the Nasdaq 100 equal weighted. So we're still holding above a recent breakout area. So I guess in terms of prior resistance now becoming support, this would be another one of those potentially that you could see that happen.
Yeah, and while this has lagged, this is like the S&P 500. Just shows you
Yeah.
how important the mega caps are, even just in the S&P 500. But this is sort of a reflection of that growth stock, and obviously on a tech bent. But that's generally been working out pretty well, even with software having a tough time last couple of days. This is still doing well. This is why there's still stocks to buy. You look at this and you go, yeah, there's stocks to buy in this kind of environment. Even when you look at other things maybe being extended, or in the indexes being extended or under pressure.
Right. Well, you mentioned software. So that's a good segue to IGV, the tech software ETF. Just a fantastic move over the last 5 weeks heading into this week. So, not all too surprising to see a bit of a pullback here. And of course, it's never fun to be in that kind of pullback. But when you see leading software stocks turn in the kind of performance that they have over the last month plus, seeing this 1.6% decline today down to the 10-day line after hitting resistance at a logical level makes sense.
Yeah, it does. And honestly, it's like that's one reason why we talk about like not being that happy about stocks that have run up sort of from the bottom, because there's this risk. You just don't know. There was sort of that trend line break that you had, and that was probably the best time to buy it if you were going to buy it. We had some names like ServiceNow, which looks a lot like IGV, and it's a big member
Yeah.
of IGV. That seems to have been a catalyst for it coming down, just as Salesforce was a big catalyst for the bottom in late May. So again, maybe in hindsight, we'll look in 2 weeks and say, okay, these have now formed handles, and and then we'll have companies like ServiceNow reporting, and maybe they'll move out from there. Or maybe we're going to see some more weakness, but that's why we're just going to have to wait. And so it seems like at this point, well, let's just see how things shake out. But yeah, it was not a surprise after a really strong move by software.
Yeah, and this is a good point. I mean, IGV definitely holding in there, but underneath the surface, you have the kind of declines like ServiceNow suffering, already down almost 8% on the week. Of course, in the context of the move that it's had, and we talk about 50% retracements and that kind of thing. So it's still, holding above that and the 10-week line. So it's at a pivotal level, like you said. It'll be interesting to see how things shake out the rest of the week and heading into earnings season.
Yeah, absolutely.
For a lot of these stocks. Okay, let's take a look at chips now. We looked at software. Let's look at chips. Here's SMH up about 0.2% on the day, continuing to see momentum after last week's strength.
Yeah, it was sort of a little strange. NVIDIA had a nice solid day. A lot of other names, even some sort of close peers, were down. I mean, I don't want to make a big deal of it. I will note that Taiwan Semi has sales tomorrow morning. So that'll be interesting. It might move, maybe not. Yesterday, it briefly topped a $1 trillion market cap before pulling back. So that looks great. I mean, Taiwan Semi looks great, but we'll just have to see how that flashes.
All right. And next on the list, let's take a look at XLF, because we have financial stocks kicking off earnings season this week. And I know you and Alexis covered all the key points in our earnings cheat sheet show last week. So we'll be watching the financial sector closely here over the coming days and weeks.
Yeah, I could have discussed a few stocks on this list that for today, but a lot of them have earnings in the next few days, and so this makes it a little bit more, like J.P. Morgan, Goldman Sachs, Citigroup. A lot of those have earnings in the next few days, so it just makes it a little bit. Do you want to be jumping into those? But definitely, a lot of these are acting well for a variety of reasons. But earnings Friday, Monday, Tuesday are going to be a big deal.
Yes, they definitely are. And, we talk about buying stocks, or, the trickiness that comes with buying stocks outright just ahead of earnings reports. So you have a stock like Citigroup here, earnings coming up on Friday with a breakout today. I mean, there was an early entry last week for this stock. So, these are decisions that traders are going to have to be making, and a lot of ways to do this here with earnings season, but as long as you're managing risk, that's sort of the central key point, right?
Yeah, it's a lot of, and it's just one key thing is to make sure that what your strategy. Some people just hold in through earnings, assuming your position isn't gigantic, and some people say like I'm going to sell half. Some people say I'm going to wait if I have a 10% cushion, but have rules and follow them. Don't just sort of ad hoc. Oh, this time I'm going to hold it. This time I'm going to sell it. I mean, that way, just generally have that sound risk management that you stick with.
Yes, and I know the um, thing that a lot of traders grapple with is, well, which strategy do they go with? So I think the counterbalance to what you're saying, Ed, is you need to find out what works best for you. That might take a little bit of trying out the different strategies, but once you find out the one that works best for you, you're right. I think it is ideal to stick with the strategy that you find fits your trading personality best. Okay, let's take a look at ERJ. This is Embraer, and it was added to IBD's leaderboard today. Strong outperformance, up 7.4%, heavy volume, that relative strength line perking up as it clears some key levels.
Yeah, so jumped above the 50-day line. There's sort of a trend line you could have broken, cleared as well. It's back above the old buy point, which isn't valid anymore, but still it's nice. Some people who bought around that level probably feeling a lot better. Definitely an early entry here. Maybe after a little while, market surge will show a base because it's long enough to be a base. Now it's far enough along the right-hand side. I suspect you might see it. Maybe it needs just a little more, but you can definitely treat this as a base in that perspective. On a daily, it sort of looks like a double bottom, but but it doesn't so much on a weekly. But certainly 29.95 could be as an early entry as well. So it definitely looks pretty good here. It's had runs before, it paused, but really didn't sell off like a lot of other names. You look at that RS line, held up reasonably well. I mean, we've been looking at some of the indexes where there's been drop.
Yeah.
This has been acting well for a while here.
And a nice close near highs and some strong volume behind today's gain as well. Okay, let's take a look at FANG. This is Diamondback Energy. Ed, we've been talking about technology so much for the bulk of 2024, and for good reason. Well, here's a look at an oil and gas name that's been making a comeback in recent weeks, and we have a handle, it looks like, that is starting to form here with earnings about a month away.
Yeah, it's going to be a couple more days. Looks like a handle. Nice sort of, not an upside reversal, but it reversed off lows. Oil prices tumbled, then oil prices rebounded. In the last 3 days, they're down. So, I mean, this has outperformed oil prices in most oil stocks. And so while the relative strength line hasn't been perfect, it's outperforming the other energy names for the most part, with a few exceptions. So this is definitely one, it's gonna definitely rely on oil prices, but looking strong. It may actually have a sort of a 3 weeks tight maybe forming here, which is the same thing with a handle. You don't really need it, but it's nice to show that sort of tight action. If oil prices bounce, move higher again, this is likely to be one of the leaders there.
Yeah, and here's a look at USO, which is a proxy for the price of oil here. And what a comeback in the last couple of weeks, Ed.
Yeah, really, really strong gain. So yeah, it's pulled back the last few days, but after some real troubles, it's really marched higher the last couple months.
Okay, and let's also take a look at Cava. Before we do, though, FANG added to Swing Trader today, so just a note on that. But now let's look at Cava, a hot restaurant stock cooling off today, but maybe it was needed, Ed. I'm sure those in this stock would feel differently about a decline of nearly 5% today. But if you look at this chart, it's been on a tear, a low of 58 in April, almost to 100 recently, but a clear resistance level just shy of that century mark. And arguably, this stock has needed a shakeout, Ed. So maybe we're going to get it. It's still above the 50-day line. It's still above the 10-week line. So maybe, for traders who feel like they missed this one, including myself, in that late April buy point or that reversal on earnings, maybe we'll get a solid base here to manage risk against. What do you think?
I agree with all of that. And yeah, that resistance level is basically a flat base if it hadn't been there. So you could sort of treat it like that. I'm just going to give sort of the downside negative, but I agree with everything you said. But the
Yeah, that
only
was the
thing
cup
is
half full. Give us the
the cup,
other view.
yeah, the empty half is, and is just that other restaurant stocks are
Yeah.
struggling, including, okay, we've known about McDonald's and some other names that have come off for quite a while, but now we're seeing Chipotle, and we're seeing, and some other names, Wingstop. Again, that one again could bounce as well. Texas Roadhouse maybe, but we also could be getting to a spot where, yeah, Sweet Green. I mean, that was a little bit more of a wilder stock, so you could sort of excuse that. But Chipotle in particular, it's just like, I mean, people talk about Cava being the Mediterranean
Right.
Chipotle. So if Chipotle is going south, that's not a great sign. I mean, I know that it doesn't have to be, maybe this is the one that stands out, but if all of a sudden there's this half dozen or so restaurants that were really strong, and now this one sort of looks like the last one and it's weakening. Definitely, look, if you bought this back when it hit the 50-day the last time, or bought it
Yeah.
on an actual, some kind of base, you can definitely be holding this, no problem. It's scarier if you tried to buy it yesterday as it was moving out.
Right.
That's the problem, why it was like it needed that shakeout. So we'll just have to see. This may end up being a great time. The thing is about shakeouts is that they're not necessarily, if they're really shakeouts, that they're not
You don't
fun to
know.
watch.
Yeah.
Yeah, because sometimes they don't just shake you out; they keep falling. So
Right.
if they always came back, they wouldn't scare anybody.
Hmm.
So that's just something we have to watch for. It's definitely one that should be on people's watch list because it's been such a strong stock.
Yeah. Very well said, Ed. And this has been on leaderboard since that mid to late April timeframe, and they did reduce the position today. So we'll have to see what happens if we continue to see weakness in this industry. What a potential test of the 50-day line or 10-week line looks like for this one. Cava reports earnings in about 35 days. All right, Ed, thank you so much for your analysis today. And thanks everyone for tuning in. That is it from us, but be sure to tune in tomorrow morning to IABD Live. Ed, thanks for covering for me as host, doing a little switcheroo while I fly out to LA. Looking forward to seeing you in person.
Yeah, I'm going to be there on Thursday when you're hosting, so looking forward to that.
Yeah. All right. Can't wait to see you then. All right, everyone. We'll see you back here tomorrow.